I don't know what your experience is with venture capital in that space, but it just doesn't really work with four walls of real estate. When they invest, VCs are looking for AI software returns that look something more like that. And real estate doesn't really look like that, nor should it. Brian used to say, I want Airbnb to be everything from the time you think about a trip until the time you come home from that trip. I was there through the initial parts of COVID, and you see the bookings dashboard just go off a cliff. I've never seen anything like it. And then within 30 days, it's right back up. And you realize how much the space ebbs and flows.
We'll start the show in just a minute, but first, a word from our premier brand sponsor, Homes and Villas by Marriott Bonvoy.
I'm Amy Davis. I'm the Director of Sales for Moving Mountains. Homes and Villas is actually a second set of eyes for us when we're curating our collection. They push back. They let us know when they see something that isn't quite right, and it keeps us honest about our business. We really love that partnership where it's very transparent in terms of telling us what they're seeing about a home that might need a little bit of a tweak. And I think the second thing is we're tapping into their loyalty rewards program with Bonvoy, being able to get guests that are frequent travelers and have high expectations of what is being provided. We play in the luxury space, and those are the guests that HVMB is providing. They're not providing us the guests who might be using the home to party, wants to use our home as a wedding venue. And those are the things that are also very important to us, that they're also protecting our inventory and they're protecting the Moving Mountains brand. What it's like to work with HVMB is really a true partnership. I believe in the partnership business model. When a distribution partner can provide a telephone number, a name, and an email address at the time of booking, can allow a guest to contact us before they even settled on a home to make sure they're choosing the right home, that is a true sense of the word of partnership. And a lot of other platforms don't provide those simple little details. I would absolutely recommend the HVMB platform. There absolutely is no reason that a property manager wouldn't want to partner with HVMB with all of the opportunities that they put in front of us with getting the right consumer. I have someone to talk to and I have someone to bounce ideas off of. I have a professional hospitality partner in HVMB that is a true partner. And it is very important to me as a director of sales to be able to market my brand to the right consumer, and HVMB does that for us.
Ready to take your property management business to the next level? Go live with Homes and Villas by Marriott Bonvoy by August 4th, 2025, and receive Marriott Bonvoy Platinum status for 1 year, 36,000 bonus points, and a marketing feature on a Homes and Villas marketing channel after you launch. Click the link in the description to get started today. Welcome to Alex Danny, the Real Women of Vacation Rentals. I'm Alex.
And I'm Annie.
And we are joined today by Paul Kromidas, who is the CEO and founder of Summer, the whole season. Paul, nice to meet you.
Nice to meet you. Thank you both for having me.
Yeah, thank you so much. It's nice to finally meet you. I believe I did a little session with some people back in December. It was kind of focused on the STR space, and you guys were gracious enough to sponsor it so we could give away some really fun gifts. And we had a lot of good turnout and a lot of good conversation. So I wanted to learn more about you. I didn't get a chance to do it. So before we get started, why don't you tell our listeners a little bit about your story and how you got to Summer?
Yeah, got my start in the industry through, I guess, an interesting pathway. I started off working at Airbnb, actually, at HQ way back when. So this is, probably 8 years now. Came in, initially I was doing M&A work. I was out on the West Coast, and, Airbnb was acquiring a few companies at that point. One of them was a company called Luxury Retreats. I got brought in to help them figure out what to do with that company once they bought it, where it was plugging into Airbnb, what they were going to build next, which ended up being the Airbnb Luxe product. That was a great experience. I ended up loving my time there with the team and what we were building, and joined up shortly thereafter that. Spent a few years building product at Airbnb. So transitioned over to that team, built, you think of it, I probably built it, had a hand in building it at some point, review flows, growth tools, internal tooling for the teams there at Airbnb. So, the stuff you're interacting with on the app on a daily basis. Well, maybe not anymore. It's been a bit, but at least formally. And that was my formal sort of pathway or intro into the space. Eventually, started baking on some ideas while I was there of ways to start my own business in the space. I think, I enjoy the short-term rental space because, to me, I joke with people all the time. I'm like, short-term rentals are a bit like the Wild West in a good way, right? It's a nascent space. It's been growing now for years. It's really become something that I think, if I wasn't alive, but if you think back a couple 100 years ago, there's a lot of opportunity out there to just go and be had by enterprising people trying to start their own businesses, trying to start something out in, new territories of the country. And I think short-term rentals is a lot of the same. I encounter people every day who are, starting with just a couple units, trying to grow something. They've gotten it to a much larger place. There's software providers trying to start something up. So it's a growing space. It's a fun space. There's a lot happening. Excited to be in it.
Yeah, no, I'm on the site right now, and it's interesting. I mean, definitely there's a lot of great content on here, but it's kind of like it looks like the connector between, you want people to be able to come to your site and easily be able to find, different options for these different parts of the industry. And then what's that handoff like? I see the connector and expert. How does that
We
work?
actually have two sort of sites and businesses that we maintain. So, to clear up any confusion, formerly we were an owner and operator in the space. We had an interesting model at Summer that we fundraised on a number of years back called gradual ownership. So it's basically a rent-own model on vacation home ownership. So in this case, I'll use an example. If you wanted to buy a property that you didn't know if it would be a good short-term rental or a bad short-term rental, just a second home, vacation home, whatever it may be, we would actually help you find that property, say whether that property would perform positively or negatively. Even if it wasn't a short-term rental before, we do a full analysis on it, design it, furnish it, get it up and running, and then let you buy it back 2 years later at a slightly appreciated price. Yeah, it was great, full of excitement getting that business off the ground. We got it off the ground successfully, or raised about $11.5 million in our first round of funding back in 2020, 2021 on that, and then follow that up with another $18 million round in 2023. So in addition to $50 million in debt to deploy into buying those assets. We decided along the way, started looking around at the prop tech landscape and a lot of the companies that had gotten started owning and the venture capital space. I don't know what your experience is with venture capital in that space, but it just doesn't really work with the four walls of real estate. When they invest, VCs are looking for AI software returns that look something more like that. And real estate doesn't really look like that, nor should it. It's more like that. So I think, had a nice conversation with the folks on our end, our board, and, talked about what the future would really hold for us. And I think we figured out we had something more exciting internally for the world, which was our asset management software. So what we had initially tried to solve was we'd go out and, identify these homes that maybe had or had not been short-term rentals and say that one's a good short-term rental. Well, why? How are we going to actually underwrite to that? What's the full real estate underwrite, the IRR? If you're doing a DSCR loan on it, what can you expect to get? Can you credibly underwrite to that, right? And you don't just get a high level revenue estimate for that. You actually have to go out and perform to that. So, with 2 or 3 years of operating track record behind us, we figured out that we were actually pretty good at hitting the mark on those initial underwrites and built out a nice suite of asset management software internally that we're now turning around and selling to the market. So we sold off our asset ownership and management business last year, maintained, as you alluded to, our legacy website there, which we sort of turned into, if you want to crudely analogize, folks who are fans of NerdWallet or a site like that let you connect to a lot of different providers in the space to find what you're looking for via short-term rental. That's what we're trying to do with our Go Summer website. And then separately, summeros.com is our website for our new asset management software, which we officially launched earlier this year.
So I'm curious about the asset management. One of the conversations that I think I've had with a lot of people on like the STR side, and we have this conversation all the time, is like VR, STR, VR. They're kind of different, but they're similar. How do you look at an asset these days and try to really understand what the potential is based on the last couple of years? Because we know that the post-COVID numbers are almost an anomaly. Everybody would love to have it happen again, but nobody wants to go through that again to get there. So there's that idea of like, how do you normalize what that looks like for somebody to manage an asset, to decide to go into this business? I mean, is that something that you guys have found a sweet spot in that you can help people with?
100%. I think that's become really our forte. And I think, like a lot of things, it comes with conviction around the number of data points that you have at your disposal. I say this to people all the time. I think what's most valuable about what we do is also the biggest challenge, right? When you look at this space, short-term rentals have existed for decades, but, I think a lot of us can look to, Airbnb started in 2008. That sort of, regardless of whatever your feelings are about Airbnb, that definitely caused a lot of spotlight to come to this space, and they drew a lot of attention to the space, and a lot of people started understanding more about short-term rentals outside of just, smaller vacation rental markets that I think had operated, longer term than that. And I think what you found when you looked at that is, when you compare short-term rentals versus SFR, single family residential, or commercial real estate, or multifamily, some of these other segments in real estate, a lot of them have been around in that sense for, longer, have churned through the data, and have, if you're trying to underwrite a home for regular rent, man, you might have decades of data to point to on rents dating back to the 50s or the 40s. And I remember doing this research when we first started the business, and you really don't find a ton of data in short-term rentals, like structured data that you can actually point to with any sort of credibility before the mid 2010s, right? Like that's really as far back as
for sure. Absolutely. Yeah.
So I think, we really we go as far back as we can get it. We do a lot to normalize it, clean the data. There's, sometimes you're getting duplicate data points. You have to make sure you're standardizing in certain markets. And, everyone says this, but, we kind of have our own secret sauce of how we do different inputs and what we're assigning different weights to and scoring to. But I wholeheartedly agree. If you're just looking at 2020 and 2021, it's a total anomaly. If you're looking at, 1 year after when, interest rates were pretty high, maybe that might be an anomaly too. I think you've really got to take the whole thing into consideration to really get the accurate measurement.
No, that's interesting. I'm just looking on your site still too, and there's some familiar faces that I see on there. Taylor Jones being one of them. I see him on LinkedIn all the time, it seems like lately. But who is your ideal customer for this?
It's interesting. I think there's really 3 buckets of folks that we're selling to and finding primary traction or early traction with right now. There's professional owners and operators, right? I think that's an easy one for us because, in a lot of ways we were one ourselves. So this was an internal tool that we found a lot of help and use for and didn't see out there in the market. So it's no surprise to me that a lot of other operators and owners are finding use for it, and I'd term those as, anyone from, let's call it 50 units, 40 units up to, thousands of units, 2,000, 3,000 units. The second bucket of folks is sort of what I think a lot of folks refer to as the long tail. So individual owners and operators, maybe you've got 1 or 2 units, maybe up to 10, but I think you might have a small business yourself, but maybe you don't have a team of people with a sales team and a revenue management team and all these other things around you, right? You haven't gotten to that stage of it yet, if you ever want to. And then the third bucket I think is really interesting, which is the investors, real estate capital allocators, underwriters, folks like that, right? I tell people all the time, if you're familiar with finance, you may have come across like a Bloomberg terminal at some point or another. I think our tool is the deepest in the market, and it only makes sense that we use this to analyze properties at a real estate level for investment, and then bringing that underwrite to lenders and to capital allocators and saying we're confident we can hit these IRRs or these numbers. So it only makes sense that those folks are looking to our tool as a way to analyze properties themselves and underwrite other folks to that same criteria.
Do you guys go out there and identify markets, or are you using all these data sources to kind of see what's popping up and then you kind of dig in from there?
Yeah, so there's really 2 segments of the tool right now. So there's sort of what we'll call the pre-purchase, or I should really call it the pre-go live portion of the tool, right? So if you're operating the unit or you plan to operate the unit, it's everything that happens before. So there's a whole segment of the tool, covers the entire United States right now, lets you analyze any asset out there. You can you can drop a link with, to it off of Zillow or any other site. You can put an address in, you can analyze a market. So you can identify markets that are hot or not. You can underwrite any asset. It can be, parents' house if you want. If you inherited something, you want to see what that, right? Like you can do anything. It doesn't need to be for sale. We actually will spotlight homes that are for sale, and you can dive in from there and take those into consideration. And, I think that gives a lot of people the ability to go across the country and see a lot of what's happening in different markets and different homes. And then separately, once the home is actually gone live, or you are looking to get it live, you've gotten it into your PMS. We partner with all the biggest PMSs out there in the space. We aren't competitive with PMSs. I don't think it's a winning proposition to go out and try to compete with Zilver, Guesty, and Hostaway and Track and whatnot. So instead, we want to partner with them. We know that a lot of people are having success with them and like them and want to stick with their PMS. So we just sort of sit on top of that, ingest some of that data, mix it with our data to be able to show you once that home goes live, you've actually underwritten that property. It's going to switch over here, and then it's going to be in your portfolio view. So you'll be able to track your homes, any amount of homes in your portfolio, whether it's 1, 10, thousands, against historicals, the best competitive sets in your market, different competitive sets. If let's say you're on a beach market and you add a pool to the property, okay, well, you can track it against a comp set of homes that are very similar with pools and without pools, let's say. You can have a variance report on how you're doing versus, where you projected to be and things like that. So that's sort of you want to call it the down funnel or post-purchase side of the tool. That's where the sort of asset management, I think, really comes in.
Interesting.
We'll be back in just a minute, but first, a word from our premier brand sponsor, Track.
My name is Rachel. I'm with Frontierland. Now we're under Ripple Property Management. I'm a super user, so I use several areas in Track. One of the features I really love that we got with Track that we didn't have with our system we used before is automations. So we set up automations when the system sees 2 orphan nights, it automatically sends an email letting them know, hey, these nights are available at an offer. Would you like to book? So we find a lot of conversion rates with that, and it's something we didn't have before, and it's extra revenue for the owner, time savings. They're reaching out to us and asking us, hey, great deal, how can I add a night? And it's worked out really well, and like I said, fairly easy to set up, and just you do it once and don't think about it. The onboarding to distribution, that was great. The review management is a game changer. I have an agent that's her role, and she's just like, this is amazing, thank you so much. The AI responses are really good. They need minor tweaking. The customer support on the distribution engine side is fantastic too. It's like within a few hours I have a response, if not sooner. So I've really, so far what I've seen from the distribution engine, I've really liked. I feel like there's a little more clarity with Trust Accounting and Track. The reporting's better than our OPMS system and just really easy to use. I can confidently say, hey, we've been with different systems. We've been with Track for 5 years now. We've seen it grow as a company as well. And the more we go and test out different places, we see that, no, this is where we want to be. The reporting's good. The accounting's good. For our needs, which are very similar needs to other PMs, we can say, no, we think we have the best one in terms of scalability. If you have a very small, maybe not. But if you're a mid-sized company and you're looking to grow, I would definitely think that Track is the way to go.
Ready to take your operations to the next level? Get a free market assessment, a $400 value that gives you a clear picture of how your business stacks up against the competition. You'll meet one-on-one with a Track expert who will evaluate your performance in the context of your market, uncover gaps and opportunities, and deliver 3 to 5 actionable insights tailored to your business. This is your chance to find out what's working, what's not, and where you can improve based on real market data. Click the link in the description to get started today.
So you mentioned Zillow, and I always struggle because, I don't know, in my market, I live in Florida, real estate agents are always trying to sell our house. So I can get you top dollar, whatever. But I'll get the Zillow, and then I'll get like Realtor, or I'll get another one. There's another something out there that sends you like a market data analysis that says this is how much your home is worth. And it feels like some weeks those reports they're so far apart. So I'm curious, do you know, so if you're using something like Zillow, they're using, I don't know what they're using because their numbers seem to swing so drastically. What are you using? A Zillow and like a key data and then like derive data from the PMS so it kind of like averages that out? Or how does this all work? This is where I'm lost in the numbers.
It'd be easy if I had it up. Zillow is just an example of what an input would be for a home that's for sale, for example.
Okay.
We're not actually pulling any data from Zillow.
Okay, gotcha. Okay.
Maybe most of it from the MLS. We also don't work together with key data. I would say they do some of the same things we're trying to do, but a little bit differently and vice versa. But I can tell you that, the pre-purchase side of the tool, again, I said the pre-purchase, the pre-go live side of the tool, that lets you underwrite any property nationally and analyze any property nationally is going to be third-party data, right? So it's third-party data, scrape data. How we make sure that is the best data set is by pairing it with anonymized first-party data coming from the go live portion of the tool. So we anonymize first-party data for our partners in certain markets. We go out and we say, look, there's 5,000 properties in, I don't know, Arizona that were, or Scottsdale that were, on our product. We'll anonymize the data, and it lets us compare that to the third-party data in that market and identify potential inaccuracies and discrepancies, right? Because we know that a lot of our partners don't want their data surfaced directly to anyone out in the top of funnel section of the tool, the first party side of the third party side of the tool. So that really lets us clean that data, make sure it's really accurate, surface any inaccuracies while still preserving the integrity of our partners down funnel. If that makes sense.
Gotcha. What's your plan to grow this? I mean, I know you said you're not competitive with the PMSs and you're integrated with them, but are you trying to grow through more like partnerships, or is it going to be organic going directly to the managers? What does that look like?
I think it's all of the above right now. We're early. We've had some nice success here. I think, looking at what's gone well for other folks in the space, which seems to be a mix of both of those, right?
Mm-hmm.
I'm realizing, I think, how important the partnerships are in this space. A lot of folks that do other segments, the end workflow, let's say, for a property manager or someone who's owning and operating a property, naturally, if we can help share customers, if we can have more success together, we've already structured a few partnerships. I can't announce them just yet because they're not fully signed, but very, very soon. I've got a couple in my inbox right now. So I think some exciting things. But yes, I do think that partnerships, organic growth are two of the big ones. And then, didn't always go to all of them as an owner operator myself, but we've had a lot of success at some of the conferences in the space. I know there's a bunch on the calendar that many folks look forward to. So you can find us at many of those. We'll be there with our own booth.
Yeah, great. We'll be at VR Nation and then exec conference, and we be attending any of the ones this coming spring, or we'll be later this fall.
We'll be there at VR Nation, so I'll see you both there.
Okay, perfect.
Oh,
great,
cool.
great. So what does it look like? You mentioned that you're not competing with PMSs, so this is like an add-on service. Is this another platform that they have to log into, or is it connected to their PMS, so it's sort of attached as
connected to the PMS?
Okay.
So you go live once you've signed up. It's very easy actually to just input your PMSs have a different terminology, but your token or your key. They use it somewhat interchangeably, most of them. But once we're set up and integrated with the PMS, just put your token or your key right there, and it populates all the data, and you can go from there. So yeah, I view it as and I think a lot of our PMS partners, once they take a look at it, are pretty excited about it, because I think they view it as a deeper data layer than honestly they're going to spend a bunch of time creating and building themselves. They've got their own products, they've got their own customers they need to make happy on some of that stuff. And if there's something that's augmented to what they're providing and non-competitive, that's at least the response I've gotten thus far. Seems to be, this is great. This can provide even further insights to our owners and operators. And I think two of the real KPIs I talk to when it comes to this for them are really around performance of their units and retention on the management side. So I think we can do enough to keep you performing well, making sure we talk about being proactive and not making managers proactive and not reactive. We want to make sure you don't end up in the ditch before you get into the ditch. And
right.
So much of performance in this space is it's like retroactive whack-a-mole. You're like,
you're the second person I've heard use that word, and the other one is Annie. So
it's true though. I mean, like, I can't. When we were owning and operating, again, that's where this came from. Is like our former revenue manager, like I'd get on weekly calls for like the business KPIs, and we'd go through the different properties, and I'm sitting there like, hey, why are we down this month in this property? What's going on? And then you've got to. It's always after the fact. It's like, okay, we were down. We had a bad month. It's not like, okay, we should expect to have a bad month, or things are happening that are going to lead to a bad month next month. That might.
Well, nobody wants to admit that up front. You don't want to say you're going to be bad because you jinx it. You put it out in the universe and it ends up happening. No, absolutely.
But there are certain things that you can do to try to do that. Try to course correct before you get there. I think that's what we're trying to do.
And maybe I'm confused. So is this like competition to a wheelhouse, a beyond pricing? Is it a
No, this is
sidebar, like a sidecar to it? Like I'm confused
this
about
is
how
the
this all works together.
Yeah, this is the tricky part about pitching this business to folks, because I think there are other businesses in other segments of real estate that do what we do, but it's both an opportunity and a little bit difficult because I think it's somewhat net new to the space. We're not doing exactly what anyone else is doing, but we're doing pieces of what some folks are doing and bringing it together in a different way. So I had a customer last week say to me, "No, you're a little bit of like the pricing tools. Like you've got a little bit of like the Beyond and the Wheelhouse and the Price Labs going on. We're not a pricing tool. I'm just gonna make that clear. Like you're gonna have to go take action in your pricing tool. We are talking to those folks about partnerships. So, we're not a pricing tool, but some of them started to give insights. We obviously, I think, give a lot of insights and try to give you a lot of insights into performance and expected performance. And, that's, I think, importantly in a differentiator, it's pricing sometimes that can impact performance, but it's not always pricing, right? There's a lot of qualitative attributes as well that play a role in performance of the listing. And I think we try to lean into that as well to create more of a 360 view on why a listing is performing versus not performing, not just pricing, because I think that's an important call out when you're talking about us in the space. And then separately, we're not exactly key data. I think key data does a great job of bringing a lot of data to the surface, and they have a nice dashboard. I think they've started doing competitive sets. We obviously do a lot of competitive sets, but they're not doing any underwriting. They're not really diving into like a full real estate level P&L on the home. They're not doing anything that lets you understand, Annie, if you have a home and you want to add a pool and, that pool is going to cost you X, and what's the payback period going to be on that? And will the rental return justify that if you finance the cost of that pool at a certain amount, right? Like there's a lot that goes into it that also isn't covered by that. So I think one of our customers was like, yeah, you're kind of this and you're kind of that, but you're stitching it together in a way that is different than either of those two things. So, and I think, internally at the bigger organizations that we've made sales with and gotten customers from, seems to be a lot of the sales use case top of funnel, right? Like I want to be able to turn around a very quick and very accurate revenue projection to potential owners who are customers who are shopping us as a manager, or if I'm an independent, if I'm owning myself, I want to be able to analyze a bunch of properties, and then a revenue management use case of this is helping me be better at my job on a weekly basis.
Mm-hmm. Yeah. Who comes to mind actually is Mark Lumpkin that we've had on the show before, that he has STR cribs, and they do really over the top type upgrades to properties. And I feel like, working what you're doing would be complementary to what they do, right? Like they actually execute on these like big ideas to put into a house, but like having that data to be able to back it up, of not just saying, okay, it seems like all the houses in, Orlando or in Myrtle Beach or whatever are booking because of this one thing, but being able to have access to that, to really be confident in the decision that you're about to make.
I know, Mark, it's, you're right. I think we weren't making as many pickleball courts and, basketball hoops and everything they've got going on in some of their properties. It was a similar use case. Like we'd have people coming to us saying, hey, I want to buy this property. And like I said, we have to underwrite to that. And then it's like, this is, what would it do if we added a pool? Okay, well, it's going to cost us this much. Here's what we can pay on interest. And
right.
Pay off of that. Like, is that going to make sense or not? And it sometimes it does, and sometimes it doesn't.
Mm-hmm. Yeah. I know I had a conversation, with one, actually, it was Mark and somebody else. We were talking about the Panama City Beach market, and they showed a house, and they were like, they're going to do all this stuff. And I was like, I knew exactly where that house was located. And I was like, I just don't see how that's going to return. They're like, it's on the beach. I'm like, technically it's in the city of the beach, but it's not near the beach. It's like, it's never going to generate enough revenue in order for it to do that well. And knowing where it's located, you put a pickleball court, the neighbors on the other side are going to break their guns out and be really unhappy about this. Like, it's just, it could, and so I think like sometimes it's like just having the numbers is great, but also I think you need to have a good view of it. So having the manager be able to say, like, I have the numbers and I have the market information, that's really helpful. But I had a question about, if people are looking to do these things, do you have a financial arm or access to finances to help people when they want to do these things?
On the lending side, if they're looking we do partner with a few folks, or some of the partnerships that are in the works, I should say.
I gotcha.
And then but yes, we are obviously, we have folks, partnerships down funnel with the PMSs. We have other partnerships, but as you're sort of working through it, it's a natural evolution of, okay, I've identified a property with you all and it looks great and this is what it's going to return at. And, these projections can be used to get in front of a lender potentially. Well, do you have any lenders who do DSCR loans or who would be interested in funding something like this? So yes, we do have a few folks that we're partnering with on that end. So stay tuned for more there.
Yeah. Well, exciting. You come back on Alex and Annie and do a big announcement with us.
Yeah. We'll be back in just a minute. But first, a word from our premier brand sponsor, Grand Welcome.
My name is Matt Pessler. I currently operate in Cincinnati and Northern Kentucky region and Columbus, Ohio. And we're actually looking to expand early 2026 into Indianapolis. And we've been with Grand Welcome since October 2022. I was operating 12 of my own short-term rentals, and I was struggling to find a solid local management company that understood the business. I'd already been in the short-term rental business, managing my own for probably 6+ years at the time, and I just saw an opportunity to build something better, more scalable than what the competition currently was offering in Cincinnati, Ohio. I chose Grand Welcome after experiencing it firsthand on the owner side. I had a home in Nashville, Tennessee, and I was looking for someone to begin managing that one. And so I went off with the Nashville, Tennessee franchise and chose them to be my property manager. And I saw it from an owner standpoint, a lot of the technology and things that Grand Welcome could offer an owner. And I knew immediately that I had a very unique opportunity in Cincinnati to bring a company like Grand Welcome in and operate it. Grand Welcome has helped us scale by providing strong tech systems, internal training, supportive network of franchisees to learn and collaborate with. They've also introduced us to additional services and tools that we were using on our platform from companies that assist us with taking out the trash or other technology systems that just make us way more efficient. We started seeing steady revenue growth within the first 4 to 6 months of joining Grand Welcome. Like any new business, the first couple years has had challenges, but now our team's seeing steady growth consistently every month. We're very excited about the growth. For example, last May, we're around $250,000 in gross revenue, and this May we broke $600,000. Being part of Grand Welcome has helped me expand because it gives you the capability to have the backing as far as a pricing team, marketing team, customer service team, a network of individuals that many have been doing in short-term rentals even longer than me. And when you have those resources, it takes a lot off your plate so you can focus on the growth.
Click the link in the description to get a free growth hack analysis and a P&L evaluation. And make sure to tell them you heard about this offer on the Alex and Annie podcast. I'm curious for your time at Airbnb. Tell us a story one of your more interesting stories from working there. I'm sure there's probably a lot.
Yeah, there are definitely a lot. Everyone loves this question. It's like, what happens in the four walls.
Yeah.
I'm trying to think what I can say that won't get me in trouble. I think I was there pre-COVID and through the initial parts of COVID. I think two things come to mind. One is maybe less juicy. I'll start with the less juicy one. It really taught me how resilient this space is because I was there in March of 2020. And you see the bookings dashboard just go off a cliff, right? I've never seen anything like it. You're a massive business. At that time, if you remember, Airbnb had an IPO readiness mandate heading into that year because we were gearing up for an IPO at the time. And I came in too late to make I'm still working in the space. Let's put it that way. There's some people I know who retired off their Airbnb shares and whatnot. I wasn't there early enough for that, but there were certainly some people in those halls that were wondering if their retirement had just evaporated when that happened, which is crazy to see live. I've never seen anything. And then within 30 days, it's right back up. And, it changed. And you realize how much the space ebbs and flows. It went from urban short-term stays in, the Sonder-like hotel type environments that were very popular, if you recall at the time, to, rural long-term stays, 3 weeks plus, like we're blowing up at the time, and you couldn't find any inventory. And it showed me just how resilient this space really is. It'll snap back and bounce back. But as a manager or an owner and operator, you have to keep those things in mind. And it taught all of us that if you want to create a portfolio that's resilient through any economic cycles, maybe spread your geographies out so you're not concentrated in one place. If you can afford to do that, maybe pick something that has a mountain and a beach aspect to it. Maybe pick something has urban and rural. The sooner you can get to that differentiation, the better on a portfolio level, just to solidify what you're doing. And then, but I think that was one big lesson. I think maybe something juicy. Airbnb has no shortage of ideas and thoughts about where they want to go in the space in general. And I think one thing that people always get confused is Airbnb does not consider themselves to be an OTA, right? I think, anyone in the space would say, oh, it's booking, it's Vrbo, it's Airbnb, right? Like Airbnb thinks of themselves as something more than an OTA. Whether that's true or not is not my place to judge, but that's why they invest in things like the Icons launch last year. Folks may have caught. It's like, get a dinner with Kevin Hart or whatever, play basketball with LeBron. I'm trying to remember some of them that they had, but Booking and Vrbo aren't going to do that because they're thinking of themselves as an OTA. And I think Airbnb is always trying to push the limits of what they're trying to do and what that means. And you can naturally assume where they've wanted to go in the past, or at least thought of going in the past. I can tell you that there was a time, and I'm not sure if they still think this way, but there was a time when Brian used to say, I want Airbnb to be everything from the time you think about a trip until the time you come home from that trip. So you can imagine all the steps that you may take somewhere and back from somewhere, or within us, or what you're doing in that place, right?
Yeah.
That they could or could not have been considering going into or delved into in the past. So I think I learned to never put them in a box and think they're just going to do the obvious thing that everyone thinks they're going to do, because 9 times out of 10 they're thinking something different.
And I think because of that, I mean, directly and indirectly, that it has been why the trajectory of Airbnb is the way that it is. I mean, they always looked at themselves as something bigger than what they are, what they were, which I think is a great just lesson and business mindset for any company to be thinking about, of like, always think bigger. And I mean, your brand is everything. Like, they've invested so much in their brand that, I'm sure if you look at it, they're probably comparatively still spending about the same, or pretty close to what Booking and Expedia spend on paid search, but they don't necessarily have to that extent that the other OTAs do, because they really have built a brand that they're just top of mind, that they are associated with the product of vacation rentals. So it's interesting to watch, and I think what you said makes sense. I mean, I would love to have been on some of the brainstorming meetings of like, if what could we possibly do? I mean, literally, when money is no issue, the list can get pretty long.
Well, you know what else I learned though? When money is no issue, there can be a lot, of wasted money too, and a lot of
there can be a lot of other
issues.
issues.
What could possibly, there's something, and I think to their credit, they learned this when COVID happened. When you're potentially faced with losing everything, all of a sudden you get really down to brass tacks and reality is, and focus in. And to Brian's credit, he fundraised immediately. He focused in on the core business. He dropped all the side frills and what it could be. It was just locked in on what it needs to be right now. And I think that solidified their position more than anything. But to take it back to a comment you just had that I think is spot on, the brand side, it's one of my biggest lessons from being there is, I think when someone compliments someone and say they're a great storyteller or they're a great salesperson, it's taken as like a negative sometimes. I think Brian is an exceptional storyteller and an exceptional salesperson. For sure. Everyone who works there, I can tell you right now, everyone who works there totally drinks the Kool-Aid in the best way possible. I drank the Kool-Aid. Like, you are ready to run through walls for that company, even if you don't know them personally that well. And they learned that lesson with the marketing side when COVID happened too. I remember the first thing to get paused was all paid advertising, naturally, because that's, before you cut people, you want to pause that. And that was part of the reasoning for why they lean into the things like they do with Icons. Icons is essentially a marketing spend. It's not driving bottom line. Like, how much is the dinner with Kevin Hart driving to the revenue? Much, but that's a marketing play instead of paying Google. And Brian will say this, he realized he didn't have to pay Google because the brand they built was so strong. People were just going to show up on Airbnb. Anyway.
They're going to know it anyways.
It'd stand on its own.
You're very smart. Yeah.
Definitely a case study in how to do everything right, but I'm sure there was a lot of failures behind the scenes that
Oh,
nobody
for
got to
sure.
see, for sure.
For
Yeah.
sure. I mean, look, whether it's there or here or I've seen other people launch and get going. I don't think anyone becomes an entrepreneur because it's the easy thing to do. I have a lot of respect for anyone who tries to start any business because it's not easy, right?
Yeah.
You're trying to create something with your bare hands, and even there it's funny to say now, but they were rejected from Y Combinator initially, right? That's one of the big
Yeah.
in Silicon Valley, and people will sit there
Yeah.
and talk about how great a business it is that passed on them multiple times. They had to beg people for money in the beginning, right? So like people thought it was a crazy idea. There's so much of this that comes down to just grit and perseverance and just kind of not dying, so to speak.
Yeah. Yeah.
It's amazing how some people are born with that like drive to know that if they have an idea, they have to see it through instead of just giving up, because he could have given up multiple times for sure.
For sure. I mean, I not to pat myself, but we had I wouldn't say we were close to death, but I think there were people who've talked to me now who reached out and said, I probably would have just thrown in the towel if I felt like the first business wasn't going to be fundable business down the line, or a business that was going to be $100 million business or something else. Just go ahead and throw in the towel and move on to something else. But I think when you've got a passion for building, when you've got a passion for when you see an opportunity and you feel like whatever space you're in needs something, I think it's a powerful thing. And I think getting buy-in from other people is, just like I said before with Brian, it's again, whether you're doing this locally as a property manager, whether you're running your own cleaning service, like there's a ton of applicability to starting businesses across the board.
Sure.
Yeah. Yeah. Well, super interesting. We're always amazed by how many just brilliant people have come into the industry, and certainly in the last, several years since COVID, it's expanded, but really interesting to see, a business model, even like what you've got, Paul, that, going back 10 years ago, nobody was thinking about having something like this. I mean, they needed this information, but, it's the sharp individuals that really saw the opportunity and then was like, I'm going to figure this out, because people are sick and tired of using spreadsheets, right? And how can they figure out all this information in one place? So
100%.
really cool. Yeah.
For sure.
So, well, we're excited to see you this year at all the shows. If there's any way that you'd like our audience to reach out to you, what's the best way for them to get in touch?
Yeah, you can check us out at www.summeros.com. Reach out to me personally. My email is paul@summeros.com. We have a great, sales team. Happy to take you through it live, share more, and we can connect with your PMS as well and get you going on a free trial. So
yeah,
love to have you.
Cool. Well, if anybody wants to get in touch with Annie and I, you can go to alexandanniepodcast.com. And until next time, thanks for tuning in, everybody.